Welcome back to the channel, guys. The last few days have been absolutely insane across the crypto markets. Coins that were flying high just a week ago are now completely devastated. We're talking 20%, 30%, and even deeper cuts across the board. You can through CoinMarketCap or your Binance watch list, and it feels like a sea of red stretching endlessly, one coin after another collapsing under the weight of fear. Yesterday's crash? That wasn't just another dip. That was on a whole other level. It shakes confidence. It was the kind of moment that reminds you that crypto is not just numbers moving on a screen. It's psychology, emotion, and raw human panic all bundled together. This video is for informational and educational purposes only. Nothing discussed here should be considered financial or investment advice. Always do your own research before making any investment decisions, as cryptocurrency and digital assets are highly volatile and involve substantial risk. Right now, the Fear and Greed Index is sitting at 27, deep in fear territory. But you know what's wild? At the beginning of this year, we were sitting around 10 or 15 fear. People were terrified back then, too. A lot of investors couldn't handle the pressure. They left thinking they were escaping disaster, only to watch the same markets they sold at the bottom rebound into a massive wave of extreme greed just months later. That flip, from extreme fear to extreme greed, happens over and over again in crypto. It's like a psychological pendulum that never stops swinging. And we might be heading for that same story again. Sure, the index could slide back toward 15, maybe even lower, depending on how the news cycle moves. But eventually, it's going to swing back, just like it always does. When the sentiment shifts and everyone suddenly feels like crypto is the safest, most obvious investment in the world, that's when the greed returns full force. And here's the funny part. That's also when most people start buying again, right at the top. The truth is, the best time to buy is when everyone else is terrified, when the market feels like it's on fire, when people are saying crypto is dead. That's when the smart money steps in quietly. Buying fear instead of chasing greed, that's the difference between a trader who survives and one who gets wiped out. That exact mindset is what kickstarted my own portfolio back in the day. Every meaningful gain I've made came from taking positions when it felt uncomfortable, when social media was filled with panic and disbelief. This moment right now feels no different. It's uncomfortable, yes. It's stressful, definitely. But it's also loaded with opportunity, the kind that doesn't come around often. What you need to understand is this. This isn't going to be the last flash crash we experience in this market. Not while Trump is president, not in 2025, and probably not in 2026 either. There will be multiple cycles like this, waves of panic and recovery, fear and greed. And every single time, the same lessons will apply. People using leverage right now? I get it. The temptation is strong, but it's a game of Russian roulette. Those who stopped using leverage after Trump first took office and crashed the market learned this lesson the hard way. That initial shock in the first quarter of his presidency set the tone for what kind of cycle we're living in now. There's simply no need to gamble with leverage in an environment this unpredictable. I've been tempted myself, more than once, to throw a little leverage into the mix. But every time I resisted, I saved myself from unnecessary pain. In a market that's constantly on edge due to political volatility and surprise policy announcements, the smartest move you can make is to protect your capital, not chase quick wins. Now let's talk about what triggered this most recent market meltdown. Trump announced he might impose an additional 100% tariff on China. Let's be honest, most of us know that's not going to happen. It's political posturing, maybe negotiation tactics, maybe theater. But the timing? That's what really made it sting. He dropped that announcement on a Friday, right before a low-volume weekend when liquidity is thin and volatility skyrockets. In a way, that's almost strategic. Some call it manipulation, others call it opportunity. Either way, it worked. The market tanked hard, panic spread like wildfire, and positions worth billions were wiped out overnight. During the COVID crash, we about $1.2 billion in liquidations. When FTX imploded, it was $1.6 billion. Yesterday, $19.3 billion liquidated in a single day. That's not just a market correction, that's an earthquake. And every time something like this happens, the same thought crosses everyone's mind. You wish you bought during the COVID crash, you wish you bought after the FTX collapse. Well, guess what? This is your version of that crash. It's messy, it's scary, it's uncomfortable, but it's also a gift if you play it right. But here's the part nobody wants to admit. The people getting hit hardest right now aren't the cautious ones. They're the greedy ones. The traders running high-leverage long positions, the ones chasing meme coin pumps and perpetuals with 50x leverage, they're getting wiped out left and right. It's a harsh truth, but greed has a way of resetting markets faster than any regulation or exchange hack ever could. And honestly, at this stage, perpetuals are doing more damage to market stability than meme coins. Meme coins at least ride on community hype and social fun. Perpetuals are just pure greed packaged as financial instruments. Take Ondo, for example. It dropped to around 25 cents. That's even lower than its early year lows when Theo crashed to 53 cents back in April. That kind of price action doesn't happen without deep liquidation cascades and panic selling. Ondo breaking below its previous lows shouldn't have happened fundamentally, but it did, because leverage and fear combined into a perfect storm. And the funny thing is, now everyone expects Trump to tweet something new or make another announcement that crashes the market again. That constant state of anxiety is shaping investor psychology. People aren't holding long-term positions anymore because they expect volatility around every corner. 2025 has become the year of non-holders, the year of traders, doubters, and short-term thinkers. 2024 was different. It was a year of optimism and conviction. But 2025, it's a battlefield where only the disciplined survive. Set limit buy orders on your favorite coins way below current prices, at levels you think they'll never reach. Why? Because in markets like these, the impossible becomes possible overnight. It's not about gambling, it's about being prepared. Keeping all your money in stablecoins might feel safe, but it's not productive. Instead, set deep buy orders, levels that make you laugh at first. Let's say Ondo is sitting at $5. You might think it'll never go below $4, but imagine setting a buy order at $2.70 or even $2.50. If the market experiences another flash crash and that order gets filled, suddenly you're looking at a 3x, 5x, maybe even 6x gain once prices recover. These are the kinds of trades that change portfolios, not by luck, but by preparation. Kaspa, for instance. It dipped down to just 1 cent at one point, then bounced right back to 6 cents. That's a clean 6x return in a ridiculously short time frame, literally minutes in crypto terms. That's what volatility can do when you're prepared for it. If you had orders set at those deep levels, you'd be smiling all the way to the bank right now. Don't try to predict the exact bottom or top. Focus on positioning yourself strategically. The best trades often happen when you're asleep, when the market feels broken. That's when patience and discipline make you money. A lot of people are abandoning crypto right now and heading to the stock market, thinking it's safer, more stable, more predictable. But that's not the move. That's a retreat, not a strategy. The stock market isn't some magical safe haven. It's just slower, and the returns are smaller. Crypto, even with all its chaos, remains the most asymmetric opportunity out there. The key isn't to run from volatility, it's to master it. If you learn to understand the rhythm of this market, fear, crash, accumulation, greed, repeat, so don't panic. Stay calm, stay liquid, stay strategic. This is the phase where wealth quietly changes hands. The people selling in fear now will be the ones buying back in at the top later, while the disciplined accumulate quietly at the bottom. The cycle is as old as the market itself. The question is, which side of it are you going to be on this time? Patience isn't just a virtue here, it's a survival skill. Every crash is temporary, every panic fades, and every moment of fear eventually gives way to another wave of opportunity. Stay smart, stay sharp, and remember, this is the time to build, not bail. All right, guys, that's it for today's breakdown. The markets may look brutal right now, but remember, every dip hides an opportunity for those patient enough to wait it out. If you found value in this video, make sure to hit that like button, subscribe to the channel, and turn on notifications so you don't miss any updates as we track how this market evolves day by day. Drop your thoughts in the comments below. I want to know what you're doing during this correction. Are you holding, accumulating, or staying on the sidelines?